So when an institution A sends cross-border payments to institution B, like today we use US dollar. So exactly in this case, GBP gets converted to XRP into Philippines peso. But XRP is taken from the public chain, right? The reason XRP is used is because it's most suitable for payments, because it takes 2 to 3 seconds, it's extremely fast, and it's uniquely suited for a cross-border payment. Cross-border payments sometimes can be between 2 to 7% of the principal value. That means if you're sending $200 US, $14 will be taken away between these costs. And the biggest cost is liquidity cost. In the case of using ODL, on-demand liquidity, the solution that's started by Ripple, there is zero Nostro account balances that are required.
I want to welcome you to the second season of Couchonomics with Arjun. Join us this season as we go beyond fintech and payments and embark on the journey into the future of financial services, a future which will be shaped by existing and new developments in technology and innovation, including and not limited to the likes of embedded finance, open banking, ESG, various versions of metaverse, decentralized finance, digital currencies, and other trends. On the couch, we're going to have the most influential and progressive-minded founders, executives, investors, regulators, innovators, and industry commentators from across the MENA region and beyond. Join us as we unravel a multitude of layers of the financial services industry and try to learn how technology will continue to impact the world that we live in. Couchonomics with Arjun is proud to collaborate with some of the most respected and innovative names in the world of payments, fintech, and technology. Arjun is a reliable end-to-end payment solution that provides innovation and flexibility to help businesses achieve their ambition faster by turning payments into a strategic growth driver. Get everything you need with 2U, a Saudi-based super app for delivery, mobility, on-demand services, and a lot more. 2U connects you to everything you need to enrich your daily lives by building an ecosystem across its end consumers, merchants, and reps. Visa is a world leader in digital payments with a mission to connect the world through the most innovative, convenient, reliable, and secure payments network to enable individuals, businesses, and economies to thrive. Jidea is a leading fintech and payment solution provider founded in Saudi Arabia, expanding rapidly across the region with established operations in UAE and Egypt. Jidea's vision is to empower merchants with the tools to start, manage, and grow their business. M2P pioneers next-gen fintech through innovative offerings across payments, lending, and banking landscapes. Their comprehensive tech stack powers end-to-end banking services, BNPL, customized credit cards, prepaid cards, and more. Welcome to today's episode of Couchonomics. I'm your host, Arjun. And today I'm joined by the Managing Director of Ripple for MENA and South Asia, Mr. Navin Gupta. Navin, welcome.
Thank you very much, Arjun. Great to be here.
It's been a while. I spoke about this podcast that I do, I think a while back. I'm excited to have you here. I've got to make one thing very clear up front. We're going to talk a lot about Ripple and you, but I'm actually going to use this opportunity to ask you some questions which hopefully will educate my listener base.
I'll do my best, and I'll also try to make things easy as possible. So I'll not do any mumbo jumbo speak, and let's see if we can make it very simple and easy.
And that's exactly what we'd like to do, right? So let's start with Ripple, right? Sure. Let's start with Ripple. Great name, right? Talk a little bit about the genesis of Ripple. Where does it come from, right? What is it that you guys do, right? And sort of, what's your vision?
Yeah, perfect. So let's just talk about the start of Ripple itself, right? So fundamentally, when Chris Larsen and the group started Ripple, what they said is they said, hey, if goods need to move around the world, today we have a container that takes goods from, say, a furniture manufacturer in India to a buyer in Hamburg in Germany. And the container takes that furniture, which is packed in the factory of the supplier, takes it to the buyer and makes sure that during the transport, the friction is minimal. That means damage to the goods is minimal. Whatever is packed from the point A gets delivered safely to point B, right? So that's what container made it possible for physical goods.
Physical goods.
Now, internet did exactly the same thing for information.
Agreed.
So let's assume Arjun wants to send an email to Navin. So what internet protocols do is take that packet of data, take it from Arjun, deliver it to Navin, totally safely encrypt it in generally, and then the delivery is completed. So they move information from point A to point B. Now, what Ripple said is this is true. This is not true about money, right? So think about money today is in the same place where post offices, which used to collect information domestically, you would write a letter. And when you wanted to send a letter overseas, it would take more time, it will take more money, right? And then email changed it all. So fundamentally, the founders of Ripple, what we call is as Internet of Value, wanted to globalize movement of money around the world. That means Arjun. And here, when I say money, I'm talking about a legal money where a person who's authorized to send, where money essentially belongs to you or that value belongs to you, want to transfer that to Navin, and it should move like an email moves today. That means in few seconds, you should have a debit in your ledger and Navin's account should get credited with exactly the same value. And it should move frictionless, seamless, easily, almost at nil cost, and globally people should benefit from it. So that's how Ripple was formed. And that's the reason our biggest use case and the thing that we focused on was cross-border payments. And then we can talk about it a little bit more.
Okay. And when you say cross-border payments, it's cross-border payments, cross-border remittance, right? So I hear the term RippleNet, right? I also hear the term XRP associated with Ripple. So staying in that same vein, could you explain what is RippleNet, and then also, explain to us what does XRP stand?
Absolutely. So let me take a very simple analogy because that's the way it's easier for everybody to understand. So think about Cisco. So Cisco is a tech company, right? Now Cisco makes routers, right? And these routers are used by companies around the world. So for example, Arjun may use a router and Navin may use a routers. Let's call them information nodes because routers are nothing but information nodes, right? And all this technology that Cisco makes and the routers essentially sit on the top of internet, right? And internet essentially is the carrier between Arjun and Navin in this case for information, right? So if we think of Ripple, Ripple is the equivalent of Cisco in this case. So it's a tech company which essentially creates software, right? And then routers are nodes. So nodes in the case of RippleNet are banks, financial institutions who decide to participate in this money system, right?
Okay.
So you think of RippleNet as banks, as PSPs, people like MoneyGram, people like Azimo, people like many other institutions, Lulu, and many other PSPs or banks who decide to participate and become nodes, right?
Okay.
And then essentially XRP is...
Just one second. So RippleNet is the network which connects all these nodes.
That's right.
And that net is run by Ripple.
So that network is facilitated by Ripple because essentially the Ripple software essentially runs it. But otherwise, when institution A sends information or something of value to institution B, Ripple is not participant to that, right?
Okay.
So A, in a peer-to-peer fashion, can send money or information to institution B or C or whatever the case may be, and that's how RippleNet would essentially work. So the transactions are peer-to-peer, but of course the software that is running both A and B is proprietary or has been created by Ripple as a tech company.
Okay.
Right? And then of course, like the internet, blockchain is the internet equivalent, which is the system for money, and XRP is one of the assets like Bitcoin, like Ethereum that rides on the top of it. It's a public chain, right? So it's not proprietary to Ripple. But what we do is when we send cross-border payments, right? So when an institution A sends cross-border payments to institution B, like today we use US dollar. So to give you an example, when GBP moves into Philippines peso, GBP gets converted to US dollar. US dollar gets converted to Philippines peso. Exactly in this case, GBP gets converted to XRP into Philippines peso, but XRP is taken from the public chain, right? But you could do exactly the same thing with GBP into Ethereum, into Philippines peso, GBP into USDC, into Philippines peso. The reason XRP is used is because it's most suitable for payments, because it takes 2 to 3 seconds, it's extremely fast, and it's uniquely suited for a cross-border payment.
Okay, so staying with that sort of speed and efficiency, right? So what is the benefit for me to use Ripple?
Yeah.
Because, cross-border remittances, they have been there forever. They're not most efficient. There was a very interesting analogy where someone said, I can actually catch a flight from LA or New York to Tokyo with cash in my bag,
Yeah.
and I'll get that money across to my recipient faster connecting flights than I would through the cross-border remittance network which exists.
True.
So efficiency, but talk to me a little bit about that and what other benefits are there?
Absolutely. So let me just make it very easy, right? So basically in RippleNet, two nodes, let's say node A and node B. Let's just, for simplicity, just take their two banks. They want to speak to each other. They are able to speak to each other almost like WhatsApp, right? So in our technology, what they're able to do is they're able to put the address of bank B. And let's assume the bank B says, I'm okay to accept messages from bank A, like what we do in WhatsApp. Once our phone numbers are there, we accept the person, then the bank A can communicate with bank B. So let's assume Arjun is the customer of bank A. He says, hey, you know what? I want to send money to Navin, who's the customer of bank B. The first thing will happen is just a message will go from bank A to bank B. Hey, Arjun wants to send money to Navin. Are you open to accepting this money? And bank B can essentially look at my bank account and essentially say my bank account is active and I'm a good person, and AML and all the KYC checks are done. He says, yeah, you know what? Arjun's money can travel to Navin from bank A to bank B. So the thumbs up is given. And then the moment Arjun presses enter, your account will get it debited. And in a few seconds, the account of Navin will get credited and everybody can go home. So just for example, one of the biggest benefit is even before the debit happens, we are able to pre-clear a transaction, which means we are able to do the checks on the transaction. We can make sure that indeed the account is not closed and any other checks that need to be done by institution A or institution B. Because for example, one of the biggest problem today for Arjun is, let's assume by mistake, he puts Navin's last name as a different name, that the transaction will go in a black hole, and it'll maybe take you 7 days to find out, hey, you know what, by mistake, instead of putting Gupta, I put John, right? I put something else, right? And that's a big problem. So that's just on the information exchange side. The second thing happens on the transfer of value side. And here it's important to understand that banks have used something called as Nostro account. The easiest way to think about it would be working capital for banks. So exactly the same scenario. Let's assume bank A, whose customer are in currency, let's say GBP, when they want to send money into Philippines peso, what they would do is they would park very large sum of money. So let's assume they would park on a Friday evening, $5 million equivalent in Philippines peso, which is essentially kept with the bank B. And then when Arjun walks in, gives his 1,000 GBP, then that gets debited and the Philippines peso account gets credited. And these keeps happening with hundreds of transactions till that $5 million equivalent gets exhausted. Now, people ask me all the time, why are cross-border remittances so expensive? They are very expensive because somebody's bearing the capital cost of this $5 million equivalent. Somebody's bearing the depreciation risk of this $5 million equivalent, and somebody's waiting for the customers to come in one by one, so that this amount slowly gets depleted, right? And I think you already know this, that cross-border payments sometimes can be between 2 to 7% of the principal value. That means if you're sending $200, $14 will be taken away between these costs. And the biggest cost is liquidity cost. In the case of using ODL, on-demand liquidity, the solution that's started by Ripple, there is zero Nostro account balances that are required. So exactly what is going to happen is GBP in real time will get converted to XRP. XRP within 2 seconds will travel to Philippines, and in Philippines, it'll get converted to Philippines peso and the payout will happen. And this can happen throughout the day.
So there's no need to create a Nostro
No need to
account.
create Nostro accounts. It happens 24/7, real time, with real time rates on both the sides. The execution is very fast. There is almost nil friction, and there is zero working capital that is required. That means all this cost, which was inherent in the parallel system, can now go back to the customers, and then we can all essentially enjoy much cheaper, faster, and more efficient remittances.
So that's very, very, very fascinating. I've got 2 questions.
Sure.
Might be dumb, but let me ask the dumb questions. I say, I specialize at half smart questions. This might be less than half smart. So you will, if money has to move within RippleNet, you only convert into XRP. correct?
We don't convert, so we essentially use an exchange. So, for example, Bitstamp is an exchange that we would use in the UK. For example, CoinsPH is an exchange that we will use in Philippines. So these are exchanges with open order book. So we use those open order books to do the conversion.
But you only do it into XRP.
That's currently we only do it in XRP, but the technology itself is neutral. So as more cryptocurrencies evolve and they have enough liquidity pairs, then we will use many other things as well.
You're able to use,
Absolutely.
and you'll be happy to. Okay. So in the cross-border remittance sector, there is always this conversation around corresponding banking networks, right? Is yours an alternative solution to creating these corresponding banking networks? Because actually it takes quite a long time, and I'm assuming these corresponding banking networks suffer from the problem of the Nostro accounts. Or are you just enhancing the corresponding banking networks?
Yeah. So first of all, what we're doing
First,
is...
you have to tell me if that's a half smart question.
It's a very smart question,
Okay,
right?
Well, very smart. Okay.
Absolutely. So first of all, what we are doing is we are not using the banking correspondent network at all.
At all.
Right?
Right.
So the easiest way to think about it would be whenever two network compete, customer wins. Right? Because, and I don't want to say that we are perfect or the correspondent banking network is not good. But the point is, whenever there will be competition, Arjun as a customer will win because now he has a choice in terms of sending his money through two networks, right? And if you look at new networks like ours that we have essentially created, it is so step change ahead, for example, of not requiring Nostro accounts, that essentially even for existing networks to catch up or to stay relevant, they really will need to significantly change the way they're working today, right? So in my view, the comparison would be post offices and email or internet. Now, yes, could post offices compete with the internet? Yes, they can, but it requires a very significant amount of change. And lots of time, just the inertia itself makes it very difficult.
But then, Navin, this begs the question, right? And this is where I want to understand.
Sure.
I meet a number of, cross-border remittance companies, money exchange players, who have built out massive corresponding banking networks. They continue to build those corresponding banking networks. And now they are getting into, if I may call the term, remittance as a service, because what they've done is they've built these corresponding banking networks and now they want to offer that to even players who arguably they compete with, right? Let's say they compete with. Then why are these money exchange houses or these cross-border remittance players continuing to do that? If they are the post office.
Yeah. So let's look at the two sides of it. So first side of it is the B2C leg, right? So the B2C leg is continuing to stay because what you're providing is you're providing distribution, you're providing ease of service, right?
Fine.
So let's assume till
that's
people...
the physical interaction.
They're the physical interaction. So till people are ready to walk into the shops, people are ready to use a trusted brand that is in front of them. It could be an app, it could be a digital channel, but that's a brand that they trust. And that trust has been built over a number of years, right? So there is a premium that is to there, right? But behind that, after the AML KYC of the person is done, which is in full compliance with the rules and regulation of that particular country, then today the system that we have built, which rides on the top of the blockchain, is super and significantly efficient. In fact, what I would say, the customer on the front end doesn't even need to know. In fact, most of the time, they don't even know that there is a blockchain layer behind which is being used to provide the efficiency.
Like how many people... I don't know going in. Yeah. I'm never going to go in and ask remittance company X, I don't want to name one, please use RippleNet to sell my money, right?
Absolutely.
So
there'll be, so what you're saying is correct. So there'll be a lot of innovation and work that will happen on the front end to make it easier and easier for the customer to interact. So it would be opening where physical locations where people want to go, right? Like, for example, we go to all big malls. They're always physical location here in the UAE. And then second, there'll be very good digital channels to make it super UI UX. But behind that, people like us are already reducing the cost of operations for the PSPs and for the banks. Now that reduction in the cost of operations could go directly to the customer, or part of it could go in a better profit for that particular institution, and also, of course, making sure that the overall risk is reduced in the system, because if you don't have a Nostro account, then you have no capital at risk.
So if I'm if I'm an outside commentator, we should stop building these corresponding banking networks entirely.
And it's already happening, some bit of it, right? But of course, what I would say is
Is it just because the remittance companies make so much more money doing the corresponding banking networks?
I think I would say two things, right? So one, I would say because there is not regulatory clarity, and we'll talk about it a little bit more in all parts of the world. RippleNet, for example, the ODL solution can't be launched in a number of jurisdictions because there's no regulatory clarity, right? Okay. So today, if
so to
somebody
achieve that full connectivity,
absolutely,
they need to have
so they need to have the full portfolio of this thing. And then the second thing that I would say is that all innovations take time. So there are, of course, adopters, and now it's at critical mass where it's moving very, very fast, but also at the same time, adoption itself takes time, right? So if you and me, after a few years, having a discussion to say, hey, what is the state right now? I would be surprised that there is any institution that is not taking advantage of the blockchain technology that is available to essentially significantly create efficiency versus where they are today.
Okay. So you got yourself into a blockchain trap now. Okay. We're going to take a step back, up, left, right. I don't know where, sure. But you mentioned blockchain, you mentioned crypto, right? So if you don't mind, we're going to try and talk about it. Sure. So let's talk about blockchain, right? Both blockchain, crypto, emerging technologies. I guess it's not my personal opinion, but I guess an opinion shared by a lot of people is that blockchain has seen slower adoption than initially anticipated, right? I want to ask you why. Sure. Some have gone as far as even saying that blockchain is an answer looking for a question, right? Can you demystify this for us?
Yeah, 100%, right? So firstly, I would just want to raise my hand and just be very upfront for the audience is, in blockchain, the money came in too early, right? Okay. And what I mean to say is, generally, you would work in an industry, and what is going to happen is you create a product or an idea for 5 years, and then you go to a VC or 3 years, or whatever the case may be, and after a number of years, somebody gives you a small amount of money, and then you, on an incremental or on a step change basis, essentially build your business. And it takes time to build. Like even if you look at internet as a technology, it took 30, 40 years from the time DARPA started the first version of the internet to the time it became a mass product, right? But what happens is a lot of time, a lot of money creates huge amount of distraction risk.
Yep.
So I would say, and again, I have to be honest with the audience, 95% of the projects that we are seeing in the market are actually not real projects, but they may be in some way lots of other things, but definitely it doesn't make sense to the mind. So that's the reason also you're seeing so much of dissonance, right? The second thing that I would say is, for a lot of use cases, blockchain will make sense. Mm-hmm. For a lot of use cases, both blockchain and cryptocurrency don't make any sense at all because they don't create any value. Those things can be solved by many centralized system or many other technologies far more efficiently, right? So this is my personal view. Two areas where you would see blockchain almost like the email movement for the internet, right? So everybody has an email, everybody has a WhatsApp. One would be payments, and the second thing would be gaming. Right.
Okay.
And I just want to take one example for gaming. So, for example,
I was actually going to ask you. Talk to us about gaming payments. Yeah, I think
absolutely. So, my son is 16 years old now, and he's an avid user of Roblox, right? And let's assume, and he's been playing that for many years. Let's assume you're a cool person. I introduce you to him. The way you will get invited is you will be invited to a Roblox game where you would not be playing with him. Somebody else will be playing. There'll be a voiceover, and you will chat while you are at your home with him, and he will judge you whether you're cool enough to be his friend or not, right? So Roblox essentially is a place, and Roblox is a token. Of course, the only issue is that Roblox today cannot be used outside of the Roblox ecosystem, but otherwise it essentially runs and works exactly like, for example, a crypto would.
Trust me, I have a 12-year-old.
Yes, absolutely. So,
I'm learning.
So we both,
and I'm firmly not cool.
And today you can essentially exchange Robux for digital collectibles. You can essentially get many things done.
There's a whole parallel economy.
100%. Yep. So tomorrow, if the ice cream guy, say Baskin Robbins, was to say, hey, give us Robux and we are happy to exchange it for an ice cream. So suddenly you exactly have what happened with Bitcoin, with the 10,000 Bitcoin and the pizza. You exactly have the same story where now Robux has an value outside where somebody is ready to trade that Robux token for an ice cream. So let's assume that ice cream is $5. So suddenly those bunch of Robuxes have $5 of value externally, right? So to me, these are two areas where where the use case is very clear, and these will be early adopters, and we would essentially use it in many walks of life. Whereas all other use cases will still take time, and also it'll take time both from a great innovative company coming around and then saying, hey, you know what, we can solve it at scale.
Okay, so let me just carry on with that thought, right? Sure. I'm just going to recap what I've just heard, right? So a lot of money came very quickly into blockchain. With all that money came all that expectation. All that expectation led to a number of projects which people wanted to justify to, I guess, validate the fact that the sector needed the kind of money which was invested. Some of those projects, or 95% of those projects, are possibly not solving any real problem, so therefore they're not of value, and therefore that's leading to slower adoption. Payments and gaming is two areas where you see early adoption. If I come back to payments for a second, what needs to happen to see greater adoption of blockchain, right, in the payment sector?
The single biggest thing that needs to happen is recognition from the regulators to essentially say, hey, here are the rules of the road, the AML, KYC, the norms that you essentially need to take care of. But after that, this particular use case can essentially take off in a country. So the only thing we need is regulatory clarity that essentially digital assets or cryptos can essentially be used to move value cross-border from point A to point B. And that's it. After that, there is nothing else that's required. Companies like us and many other companies will essentially just take this use case like a rocket ship, right?
Okay. But I've got a question, right? But that has to happen in a very systematic manner across multiple geographies because of the nature of the cross-border payments.
100%. Absolutely.
Right? So it doesn't matter if my country A is very progressive, right? But if the wider world isn't as progressive, then I actually don't gain for the benefit.
Yeah, absolutely. Or what can happen is, say, majority of the G20 countries can do it, then rest of the world can follow. Like lots of time it happens. Or it doesn't need to be G20, but like bigger countries can essentially take the lead.
Where there's flows in money and
absolutely.
so on.
Automatically, then the critical mass is essentially achieved. The moment there is regulatory clarity, it'll become a lot easier because institutions, individuals, network builders like us can essentially then say, hey, you know what, we would follow whatever the rules are required, and within that rules, within that reporting, we essentially can build it to the critical mass that's required for it to take off.
Let me flick across. You used the term digital assets, right? Now, this is a term which is being widely used right now, okay? I'm not trying to say there's lots of definitions of digital assets out there, but I do know that a lot of people assume digital assets to be different things. What is digital assets?
So the term that I would want to demystify is tokenization.
Okay.
Right. I think because that's a term that will be much useful for our users. Right. So the easiest way to think about it would be on the blockchain, anything that is of value can be tokenized or can be broken down into its smallest unit. Right. So let's take an example. We have this building today. Mostly buildings is bought by large developers. It's bought by people in the UAE. A bank in the UAE essentially finances it. Now, let's assume somebody in Japan had money and then said, hey, I want to participate in the development of this building and also enjoy the rentals and the dividends that will come from thereof, right? With blockchain, it's very easy for us to tokenize this building. And let's assume this building is $1 million, and then we decide to tokenize it into $1 value each. And when we issue 1 million tokens, then somebody in Japan in his base currency in yen, let's call it this building as podcast. The building podcast can get listed exactly the way a Bitcoin or Ethereum or anything else is listed. And then the person can essentially buy in yen token of this podcast, and essentially that gives essentially the rights depending upon how this building is essentially built. Now, in this tokenization, all the tokens can trade 24/7. The person can get exposure. He or she can buy and sell whenever they would want to. And a lot of these buildings can be built. And then we essentially have true financial inclusion where at the smallest common denominator, people can choose to participate in heavier or high capital assets like these, right? So to us, from my mind, tokenization has just begun, right, at a very, very basic level.
So
Sure.
fractionalizing allowed us to do that.
Yep.
We didn't need tokenization for that. So what tokenization is giving us is the ability to trade that fraction ownership in a more transparent manner, or can you connect the dots for me here?
Absolutely. So I think we are just using some of the similar terms. So yes, in terms of if you were to able to fractionalize it to its the smallest common denominator, then and you can call it package it in a token, and that token essentially is traveling on the blockchain where it can essentially move from ledger A to ledger B very, very easily, or wallet A to wallet B, and it's available globally. We are essentially using the same term.
Is there
so
no
basically
alternative
tokenization.
technology to do that?
There are many other alternative technologies, right?
So why are they not getting popularity?
I mean, I think people, I mean, let's call it, these are all technologies still in their infancy. And when I say infancy is they're still being trying to be developed, trying to get critical mass, because again, this requires a dance between the techies or the technologists and the regulators, right? So let's assume the rights of the token holder needs to be enshrined in the law. If tomorrow something was to happen to this building, then he or she should be able to claim whatever rights are enshrined in the token, right? Today, there is no framework to be doing that. So, but once that is in place, then absolutely this can happen. Like you rightly said, this can happen through other technology as well. But at the same time, blockchain does seem to be promising in this regard.
Okay, and can I ask a question? You can choose not to answer. What emerging technologies are you seeing which at a technology level could compete with blockchain?
I think, right, for example, definitely CBDC, right? So if we think about CBDC, of course, a lot of time people think about CBDC as a central bank issued digital currency,
right?
But you could essentially use the same framework in land registry, right? So, I mean, if you wanted to, you essentially, what is happening is think of it as a platform. So a platform is essentially built. And in this case, Arjun has something of value. Let's call it his digital receipt of his land, right? For lack of a better term, and he wants to transfer it to Navin. So essentially, you are able to do it on a blockchain, which essentially can take anything of value. In this case, it's a digital receipt for his land.
But it
still
brings you back to blockchain.
Yeah, it still brings. I mean, all I'm trying to say is that you could do it in a centralized way as well. You don't need to use blockchain, just as an example. But this will be of a big service to, for example, to citizens, like many other things will be.
Okay, so I'm going to carry on with that.
Sure.
So we're going to come to crypto a little bit, but you open the CBDC door. So I'm going to walk right through it.
Please.
Right. Again, for the sake of my listeners, sake of me, CBDCs, central bank digital currencies. In my language, it's just a digital form of fiat. Right. Correct me if
That's
I'm
correct.
wrong.
Absolutely.
Right. Okay. We hear wholesale. We hear retail. What's Navin's take? Where do you actually see greater traction coming? Where do you actually see greater value being created with the adoption of CBDCs? And what use cases do you really think will fly off the page in the initial instances?
Yeah.
Or in the initial period, sorry.
So the easiest way to think about CBDC is programmable money, right? And let's take an actual example, because that way it's easier for everybody, right? So what we did during COVID is most of the governments were worried about their citizens, and they said, hey, you know what?
I like the way you say most of the governments.
Yes, most of the governments were worried about their citizens.
Not all of them.
Not all of them. Or some of them couldn't afford it, right? So they essentially said, hey, you know what? We need to give a packet of money to Navin and Arjun to make sure they're able to take care of themselves, right? Now, the purpose of that money was that we are able to spend it in a hospital, or if, for example, if we have food insecurity, then we can go to Carrefour or to a local Kirana store and then essentially able to buy something to eat for our family, right? Now, of course, what we have seen, and this has already been proven, lots of people used it opening account in Robinhood and many, many other things, right? But that was not the original purpose of actually money being given, right? Now, with programmable money, what you're able to do is you're able to restrict for money to be used only for certain purposes. Perfect. Also, you can build an expiry factor in that money to essentially say, hey, you know what? For 6 months, 1 year, or till COVID stays, or till the time the population needs help, that money is available. The unused money essentially goes back to the exchequer, right? Can you imagine what huge benefit that will essentially have? Firstly, the money will go to the people who need it. Second, money will be spent in areas where they're needed most. And it'll be used at locations where quality service or quality care is being provided. And last, if it's unused money, so let's assume 40-50% of it is unused, then essentially the government is able to take it back, right? Or the issuer is able to take it back. So then it essentially establishes, let's call it a contract of honesty between the government and the citizens to essentially say, hey, you know what? If you have a particular need at that particular time, you would be protected. If you don't need it, then you essentially just give it back, right? So to me, it's a far better system. For example, a great use case of programmable money. So if things were to come around, and there are many things that will keep happening around the world, this could be a great use case of programmable money.
But isn't there a bunch of people who are squealing at that idea of saying big brother?
Yeah. I think there will always be friction, right? So my thinking, and this is just what my intellect says, is people can say no, but they have to put a better idea forward. If they're saying no for the sake of knowing no without putting a better idea forward, I don't buy in, because I would rather have an idea that incrementally or significantly improves the lives of people and or otherwise not do anything. If I choose not to do anything, that would be wrong.
Well, I guess welcome to the politics of 21st century then.
True.
Right. So staying with CBDCs, extending it to cryptocurrencies, right? We've had a wild ride, to say the very least, right? And I specifically pick on, before we get into sort of alternative coins or altcoins as they're called, even stable coins, right, have not been incredibly stable, right? We've had the algorithmic sorts, which obviously, blew up a few months ago. We had a bit of an issue very recently on another form of stable coins. What are the use case? Right, two questions. If CBDCs emerge, is there still a place for stable coins? And if so, where? Right? And then let's answer that question, then I'll ask you the next one, because I don't want to ask too many questions at one
Yeah,
go.
I think, so the easiest way to think about it would be, we think of life in zeros and ones, right? And the way I think about life is a continuum where, let's assume, a bank may issue a stable coin, hypothetically, right? Which is great for a particular use case, right? The government may issue CBDCs for a particular use case. So there may not be a one size fit all where essentially there is a let's call it a digital token that gets issued that cures all ills, right? And that's the way I think about it, because sometimes, for example, banks do digital trading at exchanges, right? So essentially they provide custody, right? In that case, in a closed small pool, just because say 10 banks are essentially trading with each other, a stable coin can create great lubrication or facilitation of this trading activity just between those 10 banks itself. Because, for example, a lot of time government securities are just traded within banks because it's a closed loop system, right? Whereas, for example, in a case of CBDC, it'll be a much bigger experiment. So to my mind, we should just think about the technology being there, and then people, depending upon the use case, will customize their technology and the usage of stable coins or CBDC, what have you, to solve that particular problem in a very efficient way.
So you do see both of them coexist?
100%.
Okay, so let me come across in the old coins, right? Whether it's Bitcoin or any of the others. Extreme volatility. I would even go far as saying that the initial hypothesis or the white papers of this paper that they were going to work contra to how fiat works or the normal economy works has proven to be wrong, right? I can't see anybody using Bitcoin to buy cups of coffee, although people are launching these payment acceptance capabilities where someone can come and use Bitcoin to buy cups of coffee. There are people in this part of the world who are accepting Bitcoins for apartments, apparently. I don't know how safe that is. Where do you see the whole altcoin market heading? Right?
I think it's very difficult for me to say where is the market headed, right? I would honestly say that real companies like us and many others truly need to prove the use cases of digital assets or cryptocurrency as we know today in improving the lives of people, right?
Okay.
So by significantly reducing the cost of remittances, we are doing that every day.
So I agree. So
and a lot of other people. And wherever there is no use case, I think things will be difficult, right? Everybody would struggle, right? Because if there is no use case, that means you can't use speculation till the end of the world to essentially drive value in which there is no inherent value. So in my view, if there is no utility, there is no use case, things will be very difficult.
So scarcity is not a use case.
Scarcity is definitely, let's call it, in the long run, it's not a use case.
It's not a use case. Fascinating. Fair. Let's come back into the world of RippleNet Ripple for a second, right? So with all these developments that are happening, and things are moving faster than you can use the word fast, right? What does the future hold for you guys, right? And sort of how are you preparing for it?
So for us, it's very clear. The payments essentially sit at as underlying infrastructure for lots of other use cases.
And that's
right?
what I'm interested to hear.
So it is at a fundamental level, for any transaction to happen, something is given and a payment is essentially received, or money is essentially received, right? So today, our firm view is that below $10,000, globalization is essentially capped because the friction is very, very high, right? From an information perspective, you're able to see goods and services being brought to you. Let me take a real case example.
So what percentage of the trade is below $10,000 in terms of cumulative flows?
Yeah, so I don't know the number, but let me take an actual example because this will make sense to you, right? So Arjun wants to read Wall Street Journal, right? So today it costs you $39.99 a month, for example, to subscribe to the Wall Street Journal. And if you have no other choice, it's expensive, right? And you are saying, hey, you know what? I like Wall Street Journal, but really the main news that I read is my favorite, company, let's assume IBM, and I want to read news about it, right? So today, even Wall Street Journal wants to give you the right to read that article on IBM, but there is no way they can collect that 10 cents from you for the right to read that article, right? So there are millions of dollars of content that is essentially not being utilized by people,
right?
Right?
There's latent demand. There's revealed demand, but there's latent supply.
Yes, because the payment system doesn't exist, which can efficiently collect the 10 cents from Arjun and give it to Wall Street Journal. But let's assume we were able to do that. Today, for example, if XRP was to be used, then you would be able to do that. Or RippleNet, a particular institution decided to build a solution on the top of RippleNet, they're able to do that, where they're able to collect those micropayments efficiently, almost at zero cost, for the 10 cents for the Wall Street Journal to then serve that article to you. So to me, it opens huge markets for Wall Street Journal. It opens huge number of readers to Wall Street Journal, who then from the 10 cents can essentially at some point migrate to $1, can migrate to $10 to $39.99.
Massive. You're actually talking to someone who struggles with this every single day. I'm an avid reader. I don't want to subscribe to 20 publications at $39.99 a month because that's $700 out of my pocket, and I'm never going to consume the sum total of 20 publications. But I find it incredibly frustrating.
True, absolutely. And then to me, this is true financial inclusion, right? And I know we talk about financial inclusion in theoretical stuff, but to my mind, instead of selling the shampoo in the bottle, we essentially sell it in a sachet, so that somebody who just wants to spend 1 cent still has got access to that product. Of course, the person may buy it 20 times a year, whereas one person may buy the bottle, which may they use it for 3 months. So to me, making products accessible is the biggest start of financial inclusion, because let's even forget about creating new products.
Don't we call it the sachet economy?
Yes, sachet economy. In India, it's actually...
In India, it's called the sachet economy.
The sachet economy, right? So to me, that's true financial inclusion, at least to start with, because what you're doing is you're taking the existing product, but you're making the distribution possible in smallest size possible, smallest common denominator.
Fascinating. Let's come to the sensitive topic of regulators. Okay. You must work with them, right? So what are the points of collaboration? Where do you see this collaboration heading? All I can see is that over the last 5 to 10 years, as someone who's an outside-in spectator, right, it's definitely moving in the right direction. I'm not going to comment whether it's fast or slow because I do not know what the relative speed is. And regulators, rightly so, do move at a gradual pace, because I think they do need to see how the cookie crumbles and so on and so forth. Where are you collaborating with them specifically in this region? What are your areas of focus? And are you making good progress?
Right. So first of all, this journey is a long road, right? I mean, it's a we have been working.
Actually, it's a never-ending.
It's a never-ending road,
Yes.
absolutely, and rightfully so, right? So I think any collaboration needs to start with trust building, right?
Yep.
And any trust building starts with education, right? Working with them, explaining the use cases, explaining to them how the technology works, and just being very open about it, not being saying everything is good, everything is not good. There are some imperfections, and the ecosystem will essentially work to remove those imperfections and build that trust between the regulators and the entities, right? The second thing that to do is to start some small, let's call it for lack of a better word, experiments to essentially say, hey, here's an existing entity which is licensed by you, whom you know for the last 50 years. We will start working with them, right? So for example, we work with financial industry. 100% of our customers on RippleNet and Ripple customers are regulated financial institutions. You know that they have no intent to do anything wrong. Let them start on an experimental basis, start to work with us, right? Once they start to work with us, we will do 100% reporting, everything will remain the same. And after 3 months, we would also explain to you what are the early benefits that we are seeing from this experimentation. Once you see, hey, you know what, this is working well, then you essentially open it for more and more institutions to essentially join in, right? So and again, this is a road that we have taken with multiple regulators, and it has worked around quite well. I would say regulators in this region are particularly very forward looking, right? And one of the fundamental reasons are, for example, if you look at Singapore, Dubai, London, and New York, they compete with each other as money centers, right? And what is the purpose of money centers? Money center is like a market, right? Where institution A and institution B can essentially come, and then they're able to trade with each other in any financial matters that they would essentially choose to. Now, whenever a new technology comes in, say for example cryptocurrency or blockchain, it's very important for these money centers. For example, FCA in London has been very, very forward-looking on this. MAS has been very forward-looking on this. The regulators in this region, VARA, ADGM, have been very, very forthcoming on this, right? Because what they want to do is they want to facilitate that financial transactions between institutions, right? So from our point of view, we have had very good receptions, both to educations, experiments, licensing, clear licensing regimes, and just telling the rules of the road and then saying, hey, you know what, if you want things to be different, then come, and there will be a collaborative dialogue between the industry and the regulators.
Yeah, and I would imagine that it's actually required here, right? So let's be honest. This is a part of the world where cross-border remittances are very important. This is a part of the world where financial inclusion is quite critical, because actually a very large, significant percentage of the population in this part of the world is a population who relies on financial inclusion because they're in. And if your entire argument is that you can actually make something that they need every day more efficient, then it's good. It also then brings across, in my opinion, the parallel economy, right? Whether, I don't know what percentage today sits in Hawala, onto the main economy, because one of the reasons that leads to Hawala is actually the cost of cross-border remittance, right? So it makes perfect sense. Are the traditional money remitters also as open and willing and wanting to engage, or is there more reluctance on their end?
Yeah. So I would say they are open to engaging, right? And if you look at the macro that we are all in right now, the cost of money is rising, right? So if somebody wanted to borrow US dollars, maybe 2 or 3 years ago, the cost of money was almost zero. Now it is 5.5% already, right? So if you, for example, go to FAB, go to any of the UAE-based banks, and you put a US dollar deposit, three months or 1 year US dollar deposit, you'll get upward of 5%, right? Which means whenever the cost of money is high, the Nostro accounts that essentially they keep with institutions around the world become too expensive. So they only have two choices, either to cut their profit margins or essentially to charge the customers. Now it's a huge competitive environment where you really can't charge the customers more. So what you're doing is looking for ways to make your own operations very efficient, and hence the reception could not be better.
And that makes sense. Can I ask a question you can choose not to answer? Why are the remittance companies given such a hard time here?
I think hard time by whom?
By the regulators.
Right. I'm not so sure, but it has got some possibly something to do with just like as the regulatory regimes all over the world are becoming stricter and stricter, right? And rightfully so. There is also geopolitics around the world. I think some of these are prudent measures that essentially need to be taken in a country.
Okay, we'll omit that question. That's all right. I don't want to put it in the front.
Yes.
So, Naveen, conscious I've taken a lot of your time. I've got one final question, right? Ripple's not the only player, I guess, which does what Ripple does, right? How do you see the competitive landscape evolving, right? What will keep you guys relevant? How do you guys stay ahead of the curve?
So for me, firstly, customer first, right? So we are a customer-centric company. And the first thing that I would say is
But you're not the only one who says that, Naveen.
Yeah. I agree with you, right? And I think a lot of it essentially comes...
So tell me what customer first means for you guys.
Okay, right. So customer first means, just to give you an example, like within our tech, we have already built the optionality. What that optionality essentially does is, let's assume money is moving from point A to point C, right? And the best way for it to move is from point A to D to C, instead of moving from point A to B to C. Then automatically the tech has the intelligence to essentially to be able to route that through, right? So we are already anticipating the need of the customers, almost like Amazon anticipated comparison shopping, to essentially say, hey, let multiple brands compete and let the customer make the best brand possible. So we within our product set are already thinking of ideas to essentially say, hey, you know what? Of course we are relevant for today, but how do we make sure that we stay relevant for tomorrow, right? So that's customer centric. So we are anticipating the customer need and constantly innovating, right? The second thing that I would say is that we are an open ecosystem, which means essentially we have built this payments layer or the payments infrastructure, but a lot of people can build on the top of it, right? People can build on the top of XRP Ledger, like people can build on the top of Ethereum. People can also build on the top of RippleNet as an ecosystem, and we are open to those collaborations. So
can you give us an example what it really means to build on top of something?
Yeah. So what would it mean building?
Is there an example?
Let me just think of something that will be relevant for somebody. Say, for example, if somebody wanted to build an NFT marketplace. So Arjun was to say, hey, you know what? For these podcasts, I want people to be able to subscribe to these podcasts as an NFT, right? Let's assume it's instead of a music NFT, it's a podcast NFT.
I have no clue what that means, but it's a great idea.
It's a podcast NFT, right? So already the tech and the tools exist that you can essentially launch this on the top of XRP Ledger, for example, right? And you could benefit from XRP exactly the same way in which Ripple is benefiting, right? Where you can use it as a bridge to essentially move from a digital asset A to digital asset B, or a currency A to currency B, right? And all these are interoperable. And that interoperable means you're able to take advantage of what Ripple has contributed, but you're also able to take advantage of what hundreds of other developers have contributed. Because together, we can have multiplier effect on each other.
Last question, right? Well, actually, last but one question.
Sure.
If you're going to be having this conversation in 24 months, what do you think we're going to be talking about?
In 24 months, let me just quickly think this through.
Take your time.
Yeah. So I think I would say with one enabling condition, right? Let's assume regulators, particularly in this region, are continue to move at the speed that they're moving. They're moving very, very fast, right? What you would see is a very world-leading jurisdiction where cryptocurrencies are accepted and used in a very right way, and essentially it becomes the benchmark for rest of the world to emulate.
Interesting. My last question.
Sure.
Your audience now are between the ages of 8 and 12, right? Simple words. Can you explain blockchain to them?
Blockchain is nothing but your notebook, right? So you have a mathematical notebook, right? So when you go to the school, the teacher says, hey, you know what? Today, this is your homework. And she signs on it, you sign on it, and essentially that becomes your block. So fundamentally, your notebook and every page in that notebook is a block. Your whole notebook essentially becomes a blockchain. So it's nothing but a database in which your data can be kept.
Okay, that's interesting. I'm going to use that with my daughter later today.
Sure.
Let's see if she actually gets that.
Yeah.
Naveen, it was a pleasure to have you. I think this is exactly the reason why I have this show, because I walk out of here smarter than I was when I walked in. I really appreciate you giving us some honest, simple, I think that's important, simple answers, which I think we as the audience can digest. And I guess this podcast is here to sort of add that sort of value. So I really appreciate you coming in, right? It's a pleasure.
Arjun, the feeling is mutual. Thank you very much for inviting me.
No, and I'm sure we'll be we'll be meeting you soon. I think we're gonna have a different show, an event about the art of living, which I know you're an expert on, which I think I need badly in my personal life. But that's for another.
We all need meditation, right? I think we live in a 24/7 world, and I think it's important for us to experience the stillness of the mind. And I think, to me, I'm happy to, maybe one of the days we essentially do a session on that.
Yeah, you're signed up, mate. You're signed up. I'm coming on board for that because I do need that. So thanks a lot. Yeah. Right. So everybody, that was Navin Gupta, Managing Director of Ripple for MENA and South Asia. I hope you found this session as informative as me. I think, well, as I said, I'm walking out of this room a lot more educated than I was when I walked in. I think we covered quite a lot in the sort of 45 to 50 minutes. I actually lose the sense of time these days because these conversations are quite interesting. So till next week, stay curious, if I may say, and we'll be here with another guest. With that, thank you and goodbye.